All right, let's just get right into it. Whenever artificial intelligence comes up these days, it really feels like Nvidia just sucks all the oxygen right out of the room, right? They get all the hype, all the headlines, the crazy market frenzy. But while everyone is staring in that one direction, one of the oldest giants in the industry is quietly putting together what could honestly be the ultimate tech comeback. Yeah, we're talking about Intel. In today's Explainer, we're going to tune out that surface-level noise and really dig into Intel's under-the-radar strategy. We're looking at how they're using massive investments to basically fight off a huge industry crisis that's looming just around the corner.
So, let's dive straight into Intel's master plan.
Starting with Section 1, the catalyst, AI PCs. Okay, so look, one of the absolute biggest tailwinds for the personal computing space right now is obviously baking AI directly into the hardware. Intel saw this coming from a mile away and positioned themselves right at the front of the pack. Check this out. If you look at Intel's entire client CPU mix, meaning the processors actually going into everyday computers, over 60% are now AI-powered machines. 60%. That means your traditional client CPUs are down to just 40% of their mix. Consumers aren't just testing the waters with AI. They are jumping in headfirst. Buying behavior has completely flipped, and Intel is the one supplying the engines for all these new setups.
And you can see that shift translating directly into real momentum. Intel's AI PC revenue actually jumped by 8% sequentially. Now, in the world of massive hardware manufacturers, getting an 8% quarter-over-quarter bump in a specific segment, that is incredibly strong, especially when you remember we are literally just in the early rollout phase of AI integration in PCs. It just goes to show that the hunger for smarter hardware is driving actual, tangible sales right now.
But here's the real kicker, how incredibly profitable this is for them. It's not just about pushing units out the door, it's about making really lucrative sales. The operating profit for this specific segment is sitting at a massive $2.5 billion. That represents a 33% operating margin. 33%! Basically, a third of every single dollar coming in from these AI PCs is pure operating profit. It's an absolutely massive margin, and it completely proves that Intel's early bets on AI infrastructure are paying off big time today. But, of course, it's not all sunshine and rainbows.
Which brings us to the plot twist. Section 2, the 2026 threat.
To get why the PC market might actually be staring down a cliff, we have to rewind a bit. Think back to the 2020 lockdown boom. Everyone was stuck at home and PC sales absolutely exploded, right? Now, since computers usually last about 4 to 6 years, all the industry models were predicting this massive replacement cycle hitting, well, basically right now. We were supposed to be coasting into a golden era for PC sales. But instead of that giant wave of upgrades, the cycle is getting severely pushed back into 2026 and even beyond.
So why the delay? Honestly, it boils down to basic economics. We've got this tug-of-war happening between sky-high component and memory prices on one side and consumers just not wanting to open their wallets on the other. Right now, memory is in short supply and the cost of parts is just soaring. So if you're a consumer, you look at the price tag on a new rig, then you look at your laptop from 2021 that still works perfectly fine and you think, yeah, I'm just going to wait. These inflated costs are literally choking out the replacement cycle, forcing the whole industry to wait even longer for that big upgrade boom.
And here is where it gets really scary. According to Intel's own management, because everyone is delaying their upgrades and costs are through the roof, the broader PC industry is literally bracing for a double-digit drop in unit sales in 2026. We're talking about a decrease of over 10%. That is a brutal contraction for an industry that just spent billions scaling up for a surge that never showed up. If Intel was only relying on consumer PCs, a 2026 forecast like that would be absolutely devastating.
But thankfully for them, they aren't flying blind into the storm. Enter Section 3, the stabilizer, data centers.
As the whole world pivots harder into cloud computing and enterprise AI, the back-end infrastructure is quickly becoming the most valuable real estate in the entire tech world. So, while the consumer PC market is kind of bracing for impact, Intel is padding against that crash with a totally different, wildly successful side of the house. Just look at this growth. Their data center business isn't just treading water, it is booming. Revenue shot up an incredible 22% year over year, landing at $5.1 billion. That completely crushed expectations. And honestly, it's the first major surge we've seen in any of Intel's segments for quite a while. The driver here? It's a fundamental shift in architecture. Not too long ago, data centers were pretty much obsessing over GPUs. But now, the CPU is stepping back into the spotlight, becoming just as critical in those server racks as the GPUs and memory.
And beyond those standard CPUs, we really need to talk about the massive explosion in ASICs. If you aren't familiar, instead of buying standard general-purpose chips that do a bit of everything, hyperscalers are now demanding custom silicon. They want chips designed specifically for their unique algorithms to handle highly specialized tasks inside their data centers.
Well, Intel's ability to actually manufacture these custom chips is creating an absolute gold rush for them. Their ASIC segment saw revenue skyrocket by more than 30% sequentially, and year over year, it nearly doubled. Think about that. These massive companies aren't just buying off-the-shelf tech. They're going straight to Intel to physically build their own custom designs. It's a huge growth engine that proves Intel is really grabbing a massive slice of this custom chip market.
Oh, and just like we saw with the AI PCs, this data center stuff is an absolute cash cow. The operating profit for Intel's data center segment is sitting pretty at 31%. So what you've got here is this incredibly lucrative, fast-growing enterprise business that is perfectly set up to offset the rough waters coming for the consumer PC market. It's honestly a brilliant stabilization play.
All right, which brings us to the final strategic pillar, Section 4, the long game, securing the future.
Look, anyone can have one lucky quarter, right? A random spike in demand, a quick supply shortage, it happens all the time. But investors don't want a fluke. They want a solid foundation. And that makes this next part maybe the most important takeaway from Intel's recent reports. Management came out and flat out stated that their current business momentum is sustainable. They're basically telling the market, hey, this upward trend, it's going to last for quarters, maybe even years. That is exactly the kind of swagger and forward-looking confidence that gets long-term investors seriously hyped.
And the best part? They aren't just saying it. They've got the receipts. Intel just locked in several major long-term agreements, the biggest one being with Google. That right there is the ultimate proof of concept. I mean, when a heavyweight like Google commits to long-term infrastructure deals with you, it proves that the biggest players in the enterprise space are betting heavily on Intel's tech and manufacturing for the long haul. What we're seeing is this massive industry-wide shift toward these long-term agreements, and it makes total sense because it's a win-win. For the buyer, they get the holy grail, guaranteed supply at a locked-in price for years to come, which is huge right now considering everyone is fighting tooth and nail for CPUs, GPUs, and memory. And for Intel, they get guaranteed production schedules and locked-in revenue. They know exactly what they need to build and exactly what they're going to get paid for it. It just completely de-risks the whole operation.
So, that leaves us with the million-dollar question. We know a 10% drop in the PC industry is likely hitting in 2026, thanks to those delayed upgrades and sky-high costs. But we also know Intel has built this incredibly profitable fortress out of AI PCs and massive data center contracts. So will this multi-billion-dollar master plan actually be enough to completely shield them from the 2026 market shock? It is such a fascinating standoff between unstoppable tech evolution and harsh macroeconomic reality. Keep a really close eye on Intel, because their next few moves are literally going to define the future of the hardware industry. Thanks for hanging out with me for this explainer, and definitely keep questioning the data.